Silver prices, which have risen 27% since the beginning of the year due to geopolitical support and expectations of a Fed interest rate cut, have entered a new phase, according to experts. Yesterday, the $90 mark was also surpassed. According to analysts, this is not a temporary rally. It represents a new period of triple-digit price movements supported by supply shortages, industrial demand, and monetary easing. While precious metals continued their upward trend in global markets, silver took center stage. As gold broke record after record, silver, engaging in a gold-catching trade, surpassed the $90 mark for the first time in its history, with more agile and aggressive movements. Thus, three-digit prices are now being openly discussed in the markets. This surge in silver is not just a price movement, it is interpreted as a new phase shift resulting from the convergence of supply, demand, monetary policy, and geopolitical risks. The recent surge was triggered by data from the US. Core inflation in December came in below expectations at 0.2%. Month-on-month, strengthening expectations that the Fed will cut interest rates this year. Following the data, U.S. President Donald Trump reiterated his call for Fed Chairman Jerome Powell to significantly lower interest rates, and the investigation launched. Against Powell, increased concerns about the Fed's independence. This situation triggered a surge in safe haven demand for both gold and silver. Spot gold hit a new record high yesterday at $4,639.56 per ounce, bringing its year-to-date rise to 7.86%. However, the most notable movement was in silver. Spot silver rose 5.5% to $91.55, surpassing $91 for the first time in its history. Silver prices have increased by 28% year-to-date and 199.2% in the past year. Other precious metals also benefited from this trend. Spot platinum rose 5% to $2,455, while palladium increased 3.8% to $1,913. However, silver remains the focus of the market. According to market participants, the $100 level is no longer a psychological threshold but a technical stopping point. This perception is reinforced by the U.S. Mint selling silver at $100, and the price of silver per gram in China exceeding this level. Ryan Lan, managing director of Gold Silver Central, said, "The next significant level for silver is $100. It wouldn't be surprising to see strong double-digit increases this year." The technicaltraders.com analyst Chris Vermeulen. Altainen 5.1002 5.200 Dolarlik Parablik Burr, Rally Hedeflyabulation, GMTIs 106 Dolara Gitain Potenzieli Bulunduguna. Diket Kekti. Schmes Global Securities in, Kidemli Emsha Arasturma, Analisti, Ravindor Sharma, Piasola Ons Bazina, 100 Dolarlik. Sevi Arctic Speculative, Bertoman Alaric, G. Runmuyur, AC Clomas NDA Balundu. The Standard Chartered report also presented an ambitious, bullish scenario for silver with the following statements. Silver prices have risen significantly since the beginning of 2025. This movement has pushed the gold-silver ratio below its long-term average to 57. Gold. Kachan trade is best seen in the gold-silver ratio. This ratio has fallen to 57, well below its long-term average of 68, based on our 12-month gold forecast of $4,800 ounce. A drop in the ratio to its 2011 low of $31.71 would mean the silver price would be $151.